Hey traders, welcome back to the weekly Forex Forecast. Last week we did have US CPI coming out. It came out hotter than expected, but we also saw initial claims coming out pretty weak. And so you have this bullish catalyst with the CPI coming out hot, rates have to go up, the dollar goes up. But then you also have a weakening of the US economy on the job side, and therefore rates have to go down, weakening of the dollar. So you have this conflicting kind of battle last week between the catalysts, and as a result, we can pretty much look at last week as a non-event in terms of a bullish or bearish catalyst for the dollar. So coming into this week, I do favor in terms of euro dollar downside. It looks like we've got a potential one wave here. We've got this kind of double top technical breakout. And last week we didn't really do too much. We kind of were hanging around here. We had a sell-off, and then we just had a couple of days with very, very narrow ranges in terms of their open and close. So I am looking for this to pull back, especially as we got the disappointing initial claims. I think we're going to see a bit of weakness coming to the dollar first. However, I'm only interested in euro dollar in being short. In other words, I'm only looking to be a buyer of the US dollar next week. Dollar long plays are one of the top themes I'm going to be looking at next week. So in euro dollar, if we can breach the 1.10495, this is going to be the first place I'm going to start to look for a potential reversal for 1 or 2 days down. Now, I wouldn't necessarily look for a breakout trade next week. Why? Because in terms of the euro pairs, we have the ECB on Thursday. Very often these markets just range or chop into these meetings. So I don't think we're going to likely see a big breakout intra-week. We'll probably just see euro dollar chopping up and down. So beware of that. If you are trading the euro pairs, we have the ECB. The euro pairs are not something really we're going to be focused on too much, but looking at euro dollar because we look at it every week. And the second place, of course, if we get the ECB come out and for whatever reason we see a stronger dollar, the 1.1163 would be the second place. Would become extremely overbought. Whether I'm already short or not, if I'm trading this, that'd be the second place I'd be looking for a 1 or 2 day reversal. Okay, so moving on to the portfolio selection part, and the standout theme next week for me is New Zealand dollar short. Yes, we have some stronger currencies. Yes, I like the Aussie and the US dollar to the upside, but it's the New Zealand dollar short pairs that I think are most likely to perform next week. Last week, we did have the RBNZ coming out, cutting interest rates 50 basis points. I'm looking for short opportunities only in the New Zealand dollar this week and probably in subsequent weeks. And I do think New Zealand dollar shorts are my favorite theme heading into next week. So we are going to be looking at the New Zealand dollar to the downside. That's a pretty easy one based on everything we're looking at. It's right down at the bottom of the performance metrics as well. We're going to be looking at the New Zealand dollar versus the Aussie. We're going to be looking at New Zealand dollar versus the US dollar. And we're kind of left here in a way to look for either the pound to the upside or the Swiss franc to the upside. Now, the pound is scoring in absolute terms slightly better than the franc. However, we are seeing some heightened volatility in the US stock market. And when we see that, this tends to precede some risk off. So I prefer out of the two of them, the Swiss franc heading into next week. So we're going to be looking at Swiss franc longs over pound longs next week. But you can also look at some of the pound longs as well. I mean, you can look at pound New Zealand to the upside if you wish, pound CAD, etc. The second thing we're going to look at to the short side then is the Canadian dollar. Now, I'm not a huge fan of Canadian dollar shorts going into next week because we do have the risk around the Israel-Iran situation escalating. If there is a retaliation and we see crude oil going up, this could be and is likely to be somewhat supportive of the Canadian dollar. It doesn't mean that the Canadian dollar has to go up with crude oil, but what it does mean is that if the Canadian dollar is selling off, it's probably going to sell off at a slower rate than other currencies. So then when you look at the pairs, the Canadian dollar can actually rise. So just heading into next week, the Canadian dollar shorts are on my watch list, but you just have to be careful about that Iranian-Israel conflict escalating next week, if there's a retaliatory strike. So because of that, I prefer the New Zealand dollar shorts. If I do absolutely nothing apart from short the New Zealand dollar multiple times next week, I'd be more than happy with that. But second on my list to the short side is the Canadian dollar. And third, and maybe, the yen pairs to the short side might actually be slightly better than the CAD pairs because of that risk. I'll leave that up to you guys to decide. But the third short I'm going to be looking at as a theme next week is the Japanese yen. We are not going to look at the euro next week because we have the ECB on Thursday. Euro pairs will probably chop around up and down, heading into next week. So to summarize them, we're going to be looking in today's video at Aussie New Zealand to the upside, AussieCAD to the upside. We're also going to look at Aussie Yen to the upside because the yen is moving inversely to the dollar. So if the dollar looks like it's got further to go to the upside, this is, for the time being, going to weigh on the Japanese yen as well, remember. So by having a bullish bias on the dollar, we almost de facto have a bearish bias on the yen currently. We're also going to look, therefore, at New Zealand dollar to the downside. We'll look at US dollar CAD to the upside, and we'll also look at US dollar yen to the upside. We've already looked at euro dollar, which is really a short or do nothing, but we do have the interest rate decision. And the third thing we're going to look at then is New Zealand franc to the downside. We'll look at CAD franc to the downside. And we'll also look at franc yen to the upside as well. And those are the key themes that I'm going to be focused on trading with GMT members in real time next week. Okay, so kicking off the watch list as we always do with crude oil. And of course, the blue levels here we're looking at show overbought and oversold areas intra-week, so specifically for next week. And the gold level is an extremely, in this case, oversold area that we can start to look at below this level. If you want to know more about how we're using these and what the levels mean, you can click on the link here. I've added the strategy video for you. You can open it in another window and you can go through that in your own time. But these are the exact levels that I'm going to be looking at trading next week with GMT members. So what I want to see in crude oil is I only want to be a buyer of crude oil next week or do nothing. Selling this market is not an option for me. Why? Because it is a neutral market heading into next week. It's kind of bullish to neutral. It started to move into the positive side of the performance metrics in the hedge dash algorithms. However, the overhanging issue with crude oil is the potential for an escalation in the Middle East. Now, if there is an increase in tensions or a retaliatory strike, I would rather be long crude oil when it happens than short. So going into next week, what I'd like to see is I'd like to see crude oil pulling back. I'd like to see crude oil breaching the 69.34. This market then becomes oversold intra-week. And you don't have to buy this immediately as it touches the line. You can do that, but you don't have to do that. Look for it to break this. Look for this to become oversold intra-week and then start to look for momentum to fade. Look for those reversal patterns on the 1 hour time frame, the 15-minute time frame. And that is very often, once you start to see momentum slowing, once you're oversold, you very often get that 1 or 2 day reversal to the upside. If for whatever reason, and it's unexpected that markets are going to come to their second upper or lower bounce, if they do, it generally means that market has reversed because you've got abnormal momentum that week. If we start to break through here and for whatever reason, whether I'm already long here and just risk managing it, cost averaging, this is the second place below the 63.20, I would be looking for a 1 or 2 day reversal to the upside. Whether I'm long or not, I'll be looking for that down below this level. And the third thing, of course, is if you get a fast market where you start to see this correct, and I always want to see these markets at least consolidate or correct first, but if they start to correct and then it crosses back above the moving average and you start to see the moving average turn up, you can look for that bull flag setup into the moving average and into the profit taking target here at the 81.63, because once you breach this, you become overbought intra-week. Therefore, your odds of continuing significantly higher go down or they're diminished. Okay, so kicking off the Forex universe then with my favorite theme next week, which is New Zealand dollar short opportunities. And we're starting off with Aussie New Zealand. The Australian dollar is sitting at the top of the performance metric still in the hedge dash algorithm. And this is because we're seeing a somewhat kind of inflationary return to the markets in terms of regime. And so the Australian dollar is benefiting from a higher gold price. We've also seen the price of commodities like iron ore bouncing recently, although it has been, in a more structural decline. I did a video on that not too long ago about the crisis in China. But the Australian dollar is the number one thing I'm going to be looking at next week versus the New Zealand dollar. So I'd like to see this pull back. I'd like to see us come down, take out this low next week. That would be great. So even though I'm looking for long opportunities, it doesn't mean the Australian dollar versus the New Zealand dollar can't become oversold intra-week. It doesn't mean it can make its way down here. It just means I'm looking for long opportunities. So if we breach this, especially if we start to stair-step the prior high over here, this is going to be a great place. We become oversold intra-week. We then trade into previous broken resistance turning support. This is going to be a great place to look for those reversal patterns on lower time frames for a 1 or 2 day reversal to the upside. For whatever reason, if we breach the 1.08819, this is where we become extremely oversold intra-week. And again, whether I'm long here and trying to cost average this, or whether this is an initial position, in other words, I'm not long here, I'm going to be looking for a 1 or 2 day reversal below this level. And the third thing, of course, is if we start to correct and consolidate and you get this kind of bull flag set up where you're starting to break down, you correct, but instead of taking out the lower bound, you've got this momentum here. Instead of taking out the lower bound, you break back above with momentum. The moving average starts to turn up and you can look for that bull flag set up into, in this case, the 1.1134. Great profit taking opportunity next week above this level in Aussie New Zealand. Next is New Zealand dollar. Now I really like short opportunities in New Zealand dollar next week. You can see we've had a big sell-off after this kind of double top reversal over here. And this is all one move down and we're starting to run out of steam. Now I do think we're going to continue down, take out this low, and we're probably going to see a third wave coming in because this is an even bigger kind of double top reversal. We fail over here. Now we've broken this level. But the US dollar is quite extended at the moment, or in this case, the New Zealand dollar to the downside versus the US dollar is quite extended. So I wouldn't be surprised to see us breaking above this moving average, coming back and testing and breaching the 0.6196. If we do that, we become overbought intra-week, and very often you get second wave reversals, above these levels within a week. So I would be looking here for a 1 or 2 day opportunity to the downside. If you manage to catch it clean, you could probably hold on to this, attempt to capture a bigger third wave breakout to the downside. If for whatever reason, although it's unexpected, we blast through here and take out the 0.62827, this will be the second place above this level. We become extremely overbought. I would be looking for a 1 or 2 day reversal, whether I'm short from here or not. And the third thing, of course, is if we start to move back towards the upper bound, but instead of testing it, we get that momentum breakout to the downside and we start to see the moving average rolling over. You can look for that pullback into the moving average and that bear flag set up, in this case, intra-week down to the 0.60229. And the third New Zealand pair, which I really like heading into next week, is New Zealand franc. We also have a nice sell-off to the downside and we're kind of pushing into the moving average here. So what I'd like to see is, I would personally like to see this pull back. I can either be short or do nothing. I cannot buy this market next week. So if we can pull back and breach the 0.5314, we become overbought intra-week in a market that I want to be short or looking for shorts. And this is going to be a great place to drop down to lower time frames, look for momentum to fade, and I'll be looking for a 1 or 2 day reversal from above this level. If we breach this for whatever reason and we end up taking out the 0.5390, this is the second place, whether I'm already short or not from the first level. This is the second place above here. I'd be looking for a 1 or 2 day reversal. And if that happened, I mean, you'd have to look at this. We're taking out the prior high. And especially if we did it without making a new low, that would be a trend reversal. So I don't think that's going to happen. That's very unlikely, but we always want to have a backup plan, a plan B, if the initial position doesn't really work and it starts to move against us. And the third thing, of course, as always, you can look for the fast markets and the breakout intra-week, whereby we get the moving average turn up, and then instead of testing the upper bound, you get momentum to the downside. You get that kind of bear flag set up, you're pushing higher, and then it reverses. You get a consolidation into the moving average and you can look for it to turn away. So that's your kind of intra-week breakout. It's the third thing you can look for next week in New Zealand franc to the downside. In this case, the profit taking target would be if we could start to trade below the 0.51620 intra-week. Okay, so moving on to the CAD pairs. Now the CAD pairs do have some risk, based on any tensions in the Middle East pushing up the price of crude oil. But, if these things get a catalyst and they move to their second upper and lower bounds, this is what risk management is for. It's there to capture any kind of unexpected catalyst or any kind of unknown moves. In other words, we can expect, maybe some tension in the Middle East, but we can't necessarily know what day it's going to be, right? Could have been last week, could be this week, could be the following week. So in that sense, it's unexpected. But if it comes, this is what risk management is for. The risk management part of your trading is there so that when something doesn't work out as you expect, you can mitigate, that loss or the move going against you. So I do like this heading into next week. I can either be long or do nothing. Selling this is not an option for me. If we start to pull back and we breach the 0.91930, this is the point we become oversold intra-week. I would be looking, especially if we take out this low, I would be looking for momentum to slow on lower time frames and for a 1 or 2 day reversal to the upside. If we break through here, and it could be because crude oil spikes, it comes down, maybe we take out this low and I get involved here, it starts to fade, and then we get an escalation, and let's say we see the Canadian dollar strengthen somewhat and this gets pushed down to its lower bound and I'm already long. Well, this would be the second place below the 0.9094. I'd be looking for a 1 or 2 day reversal, because your odds, even with a catalyst, your odds of pausing or reversing from below this level are around 9 out of 10. Very, very rarely do they come down or up to the gold levels, but when they do, the odds of the market pausing are very, very high. And the third thing you can look for, as always, if we start to break down towards the lower bound, but instead of taking it out, maybe we consolidate, and this becomes a little bit of a break higher consolidation. We fail to make a low, and then we break back above the moving average. You can look, as always, for that kind of bull flag setup into, doesn't have to necessarily touch it, but into the moving average, and in this case onto 0.9389. Very much like this, we break above it, you see the consolidation, doesn't test it, but then it starts to rally, consolidates into it, breaks below it, and then you start to rally. Next is US dollar CAD. Now, I do like this market to the upside. As I said earlier, I think we need to see the dollar at least pause, correct, and consolidate. It has had a very extended move, and it does need to breathe, in my opinion. So what I'd like to see is, I'd like to ideally see this market pull back. If we can breach and trade below the 1.3653 and retest this prior high, that's going to be great, because this is a double bottom. Here's your breakout point. We break through it, we pull back, we retest it. Very often you get bounces from these, and especially bigger bounces actually. If it's a confirmed breakout pattern, it settles here, it can be the start of the next leg up, not just a bounce. So I'd really like to see that take place, a pullback. We turn oversold intra-week below the 1.3659. We stair step the double bottom breakout point. This would be a great place to look for momentum to slow and for a 1 or 2 day reversal. Again, if you catch it clean, you get involved in it, immediately reverses. This would be one where you could look to see if you get the next leg up, over the next few weeks. Because again, if you've got a double bottom breakout, what does that actually mean? It means that this is a reversal, because this is a reversal pattern. So there's your potential one wave, and any kind of slowing or reversal down here has the ability to be a second wave. And that means if you capture that, you are into, once you break this high, a third wave. In other words, a trend change, a much bigger move to the upside. If we break through here for whatever reason, as unexpected as it is, and we come down and we breach the 1.3544, this is the second place. Whether I'm long or not, I'll be looking for a 1 or 2 day reversal. And again, if you get a fast market, which basically means, you start to pull back, but instead of turning oversold, you re-accelerate and you start to break out, you can look for that bull flag setup intra-week in US dollar CAD, in this case, into the profit taking target of the 1.3873. Once you start to trade above here next week, you start to see the odds of continuing diminish. And third CAD pair we're going to look at is CAD franc. Now, this was a market I was actually looking to the long side last week. I did successfully buy it, got a nice trade out of it last week, timestamp, posted it in real time with members. But now I'm looking at it to the short side. So what I'd like to see is this. I would like to see the opposite essentially of what happened last week. It came down, tested its lower bound, and then rallied. So I want to see that, but inverse. So I'm looking for this to pull back, breach its moving average, and trade above the 0.6294. Then we become overbought intra-week, and I would be looking for this to start to lack momentum, start to fade, and I'll be looking for that kind of right shoulder. In other words, a lower high for a 1 or 2 day reversal. Again, because it's a lower shoulder, like a number of these, if you catch it clean, you could look to hold on to this for a bigger move. I'm really looking to capture 1 to 2 days worth of movement or volatility out of 5. And that's pretty much, what I stick to most of the time. But it's just interesting that we have this kind of pullback, and we could have a potential right shoulder again. If you've got a reversal pattern like a head and shoulders here, we just looked at a double bottom in US dollar CAD. But if you start to fail and take out this low, that actually is the same thing. It's a reversal pattern. This turns into a 1, and the break becomes a third wave very often. So something to look out for next week. If we blast through here, as unexpected as it is, and we take out the 0.6360, this is the second place. I'll be looking for a 1 or 2 day reversal, and that would likely be a trend change as well. If we move from here all the way up and take out this upper bound, even if we reverse for 1 or 2 days, that's probably your 1, and this becomes a new 2, and we continue the trend to the upside, because that would be a major reversal. So I don't expect that, but it's good to have it as a backup, as always, you know, for cost averaging or risk managing. And the third thing I'd look for is look for this to pull back, break above its moving average. And then again, maybe it just consolidates. You get the break back down below, the moving average turns with it, and you get that kind of bear flag set up into the moving average and a follow through down to, in this case, the 0.6162. Great profit taking opportunity for intraday shorts in CAD franc next week. Okay, so wrapping up the Forex universe with the yen pairs, the first thing I would say is remember the yen pairs are very volatile compared to other Forex markets. So if you're not used to the volatility, and what that means is basically, you know, if you're trading the same amount as say euro dollar, you could have a winning trade in euro dollar, but you could lose twice as much in Aussie yen or euro yen because it just moves further. So it's more volatile. So your losses are bigger and your rewards are bigger. Now, if you're not used to the volatility of the yen pairs, there's nothing wrong with just trading slightly less size in the yen pairs versus other Forex markets. What I'd like to see is next week, I'd like to see this come down, take out the lower bound at the 98.76. I can only buy it or do nothing. I cannot sell this. We've got two nice, strong low areas down here. So if we start to trade into these, start to look on the 1 hours, 15 minutes for momentum to slow and look for a 1 or 2 day reversal to the upside, as often is the case when you start to turn oversold intra-week in a market that we're looking to be long. And if we, for whatever reason, break through here and we test the lower bound at the 96.85, this is the second place I'd be looking for a 1 or 2 day reversal to the upside. And the third thing, of course, you can see this is already consolidating. Look how it's chopping below the moving average, back above it, and the moving average is kind of moving sideways here. So what that is just telling you as a guide that it's in a bigger correction. It's trending, it's trending, it's trending, it's trending, and now it's going into a bigger correction. Now, if that's the case and you get the correction breakout before you take out the lower bound, that's when you go back into trending mode and you can look for that bull flag setup as it pulls back into the moving average. And in this case, the profit target is above the 102.59. Next is US dollar yen. Again, if we're going to get more strength in the dollar, this is probably going to translate into weakness in the yen. But just remember, the dollar does need to likely pause, like I've been saying throughout the video. So I would not be surprised to see this come down and actually start to take out the 146.56, stair step this high, or even trade below it and take out this low. That would be great. I like it when we come down, I'm looking to be a buyer, and it trades into a previous low. So in other words, an area which it's traded at before and then bounced higher, which is exactly what would be right here. So if we can breach this level, we become oversold intra-week. You don't have to jump in exactly at the level, you know, give it a day or so, come in, look for momentum to fade, look for reversal patterns, and that's where I'm going to be looking for a 1 or 2 day reversal to the upside below the 146.56. If for whatever reason, as unexpected as it is, if we start to move down and take out the 143.98, whether I'm long already or not, and I'm just looking for a second opportunity, I would be looking for a 1 or 2 day reversal to the upside from below here. And finally, if you start to trade down below it, but you get a fast market, you break higher, so this just becomes a big kind of correction, and then you break out without taking out the lower bound and becoming oversold intra-week, you can, of course, look for that bull flag set up into, in this case, the 151.74. Again, we're looking at this like this. You break above it, come down, you test it, pull away, test it, consolidate, pull away. And finally, we have franc yen. I can either be a buyer or do nothing. I cannot sell this market next week. I'd like to see this, of course, as always, come down, correct, and breach, in this case, the 171.76, take out this low. This would be a nice area. We take out these lows and we're trading into this kind of area here below the 171.76. Start to look, if you get down here, it might take a day or two to get down here. If you do, start to look for momentum to slow on the lower time frames, and I'm looking for a 1 or 2 day reversal to the upside. If for whatever reason, as unexpected as it is, we trade below the 169.51, whether I'm long already or not, I will start to look for momentum to fade once again and for a 1 or 2 day reversal to the upside before the week finishes. And the third thing, of course, is you get the moving average crossing over, and then again, you get the breakout of the consolidation before it turns oversold intra-week. That gives you your intra-week breakout, that bull flag setup into the profit taking target here at the 176.25. Once we get above that, any intra-week longs would be in a great position to book profits, because you're probably going to start to stall out not too far above that. Okay, so wrapping up the video with gold and silver as always, and I do think gold and silver are going to start to struggle as the dollar strengthens, but specifically for next week, I do think there's more upside in both gold and silver, especially if we're going to get a near-term pullback, maybe, you know, between 3 or 4 days or 5 days in the dollar index. This is going to aid gold and silver to the upside in the near term, most likely next week. So what I'd like to see in gold, and I prefer gold longs over silver longs personally, what I'd like to see is this, if we did get this to come down and retest the prior low, and we breach the 2606.29, I would be looking to step in as a buyer for a 1 or 2 day reversal to the upside in gold. If we break all the way down and take out the 2555.33, especially if we break through here and take out this low, nice key area of support, you can start to look for the market to trade into, whether you're long already or not. And in this case, I probably would already be long if we took out the first low bound. But this would be the second place I'd be looking for a 1 or 2 day reversal. And the third thing you can look for, which I think has a decent chance of happening next week, because if the dollar starts to correct or sell off immediately, notice we've already broken above the moving average. So I would not be surprised next week to see this start to pull back, settle into the moving average, and then rally potentially into the upper bound of 2708.22 intra-week as the dollar starts to pause or correct for a few days near term. And finally, we have silver. Now, I do think silver will start to underperform as the dollar continues higher over the next month or so, but for now, I can really only be long or do nothing. And again, I prefer gold. Given the opportunity between two, I will buy gold instead of silver, because there is a slight risk here. We've got this kind of double top reversal. You can see this. So if we fail to make a high and this starts to come down and break this low again, we could, depending on what's happening in the dollar, we could start to see this accelerate to the downside, because now you've got a potential catalyst, which is the third wave, right? There's one, there's your two, and then you break this and you turn into a third. So if you do start to come down, take out the 30.20, I would be interested in looking for a 1 or 2 day reversal to the upside, but I would look at the context. Have we already pulled back in the dollar and we're starting to rally into a potential third wave in the dollar? Well, if that's the case, maybe filter out any longs from this area, right? But if we continue to push higher straight off the bat and the dollar gets even more extended without pulling back, and then we trade below this low, then we can look at it and say, well, we're likely to pause at some point in the dollar, therefore, you know, I'll step in and look for an opportunity to buy. If we break through here and we start to trade below the 28.87, this is the second place. Whether I'm long or not, I would be looking for a 1 or 2 day reversal. And the third thing, and maybe this is the most likely scenario, we're already breaking above the moving average. You can look intra-week, you know, as the dollar starts to kind of pause and just move sideways or even correct a bit, you can look for silver and gold intra-week for those bull flag setups, potentially even taking out the upper bound at 32.86 and potentially even the prior high in silver next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.